Welcome, everybody. Today we're going to talk about something that I don't think gets discussed very much in trading, which is what I call multiple time frame confirmation. And the first thing I want to do is distinguish this from what is commonly referred to as multiple time frame correlation. They're somewhat similar things, but not the same. Both, I think, are equally important. So let's jump right into this. The first thing I want to do is clarify what I mean by multiple time frame correlation, because that's something that we all commonly hear about. So if you're like me, maybe you're a scalper and you trade on the 1 minute chart, and what you might do is take a look at like a 15-minute chart, and if that 15-minute chart is in an uptrend, making higher highs and higher lows, then what you might be doing is when you look at your 1 minute chart, you would wait until that 1 minute chart aligns with that 15-minute chart and then take your trades, something, perhaps in here. This is just a rough example, right? So now we have correlation. We have our higher time frame chart bullish, and then we waited for our lower time frame chart to also be bullish. That is higher time frame correlation. Very important concept, definitely not to be ignored. But that's not exactly what I'm referring to in this video, because in this video, what I want to talk about is multiple time frame confirmation. Now, to understand this, let's take a look at the charts, because I think that's the easiest way to dive into this. And I'm going to use an actual example that happened yesterday, which was Tuesday, December 10th. So yesterday, when I was starting the day, I personally like to look at the hourly chart to get my main key levels. Now, the market had been grinding its way up here in this giant uptrend, and then we started to go a bit sideways, and then finally we dumped and then kind of consolidated a little bit and then dumped some more, and then we consolidated in the pre-market before yesterday and came up to this level. And when I was preparing for the day, I'm really big on morning preparation, and I post my morning preparation in my Discord group every morning. I was looking to see what was going to happen at this structure point here, where we had the basing point of this sort of consolidation area here, okay? And the market was just kind of hitting into that right at the open. And what I put in my notes was, if we get a strong close above this area, then we can look to take longs on a retest. But if we reject from here, then obviously we might want to look to take shorts back down to the next key level below us, which was down here at 6060. Now, to kind of best illustrate this, I think it might be helpful to actually go into market replay to understand why we need to think about time frame confirmation. Okay, so the way I have my chart set up here, again, I'm in market replay. This is the day in question. This was yesterday. And remember, this is the key level here, 6071. So I have an hourly chart here on the left-hand side. And then over here on the right, I have my 1 minute chart, which is the chart that I usually take my entries off of, not always, depending on current market movement and volatility. Sometimes it's a 2 minute or a 3 minute, just sort of depends. So let's take a look at how the day develops. So obviously we open up and sort of immediately dump down below that level. Now, me personally, I don't trade the market open, so that was not a move I was going to take advantage of. And then the market kind of came down and then bobbled around a little bit here before eventually starting to break out above this key level right around here. So we can see now that, remember in my notes, I said, hey, if we get a good break and close above this 6071 area, that I'll look for retests and longs. So here we broke above, and then you might say, hey, we're coming back, we're retesting, let's get long. Now, when I'm talking about multiple time frame confirmation, this is the kind of thing I'm talking about. This level was based on the hourly chart. And so when we're looking at that, I think this happens to all of us, where we look at a chart in hindsight, or we had a really terrible trading day, and then we look at the chart afterwards, we go, oh my gosh, it was so obvious. Why did I go long there? That was such an obvious short. And I think a lot of what happens is when we're looking at the chart, we're seeing how those candles closed. So if I'm looking at this as an hourly level of interest, if I'm going to go long on this, what I really want is it should look like a good long on the hourly chart. And then I'm just going down to the smaller time frame to get a more precise entry. So right now this is 10:35. So this 10 o'clock candle is only halfway finished. This looks like, hey, we broke above this level. Let's get long. But let's see what happens here. Now look at this. This does not look the same anymore. Now we have this hourly candle with this large upper wick. This looks like a very clear rejection of this level at this point. Now it is 10:56 and we go, uh-oh, this now looks like a very different chart. So back, moments ago, if we were looking at the hourly chart to kind of see about a trade, it looks like, oh yes, good break above, but that candle was still open. So now, if we keep going forward, what time is it now? It is 10:57 on this day. Okay, 11 o'clock, and boom, the new hourly candle opened. Look how different this now looks on this hourly chart versus this. Okay, so again, this was what the chart looked like this is 10:43, right? This looks, oh my God, we broke above the level. Looks so good. But again, the candle's not closed. Look at this hourly chart here versus when we advance to the beginning of the next candle. That's a very different looking hourly chart. So when I'm setting up my morning plan, I'm looking for that higher time frame confirmation a lot of times. I want to see, how does this candle close? What does it look like? Because the previous hourly candle also closed with a wick rejecting this level. And so now this looks, oh my gosh, this looks obvious. We rejected this level. Now it's much more clear that we might be able to start to look for short trades. And what happens? The market comes back up, retests the level now that we have that confirmed closure. And then we get this nice kind of bearish engulfing type candle here. Small lower wick, but not too bad. We can enter a trade there with the stop. I like to put it a little bit above the key level there, but you can go right above the high. That's fine too. Ultimately, I'd be targeting the lower part of this range here, but especially given that we had this big old lower wick here, we might want to target, a little bit inside of that. So that would be probably where I put that target, which still offers us just about a 3-to-1 R multiple. Let's see how this plays out. And there it goes, right? So ultimately, this did move all the way down to that key level, but it took a whole lot of time, which personally, I'm not too fond of sitting through all of that. I probably would have trailed out above one of these highs for a little bit more if I was going all the way for this key level. But regardless, still a really nice trade. But the idea here is that if we're drawing our levels off of a certain time frame, and we want to base our morning plan off of what do we want that time frame to look at. This is a bearish market. So if I'm going to take long trades, I want to see this hourly give me a nice strong close up here where it might start to look something, where the market came up like it did here in the pre-market and then kind of came down and then gives me this nice close and then looks like it's testing this previous high. Then that's kind of an area that I might look to go long there, right? Then I might look to go long. But while this is forming, especially if I'm going for a somewhat counter trend trade here, really, really valuable to wait for that close. And then after the close, we really did get a nice trade entry with a much smoother ride down into our next key level. So that's what I mean when I talk about higher time frame confirmation. It's a really important concept. You can see all over the chart areas where this might have played out, like even here we broke above this key level but then closed back below. So when we're drawing our key levels, I personally like to color code them. I like to know what time frame was I looking at for that structure point and what do I want that time frame to look like if I'm going to go long there versus if I'm going to go short there. And waiting for those candle closure confirmations will keep you out of a lot of bad trades. I hope you found this video helpful. If you did, please consider subscribing, and I'll catch you in the next video. I'm Tyler, the guy behind these videos. I've been trading since 2018, and like many of you, I'm still learning and improving my performance. Outside of trading, my career has spanned over 15 years and received international recognition in the fields of behavior modification, education, and performance coaching. I've always found that teaching others helps me to accelerate my own learning. And that's why I've started this channel, as well as my trading community and education services. I don't claim to be a master trader, but I am very confident in my skills as a teacher and coach. If you found my videos helpful, and if you'd like to work with me more closely, you can find links in the video description.